Okay, guys, welcome to the Forex Trading Institute. This is your mentor here. So, guys, straightforward. I'll be just showing you on how I kill the reef, or I'll be just showing you up my strategy, the one that I call few minutes trading strategy because it's a kind of scalping strategy. So let's just get started. Okay, guys, this is our platform. This is the reef. This is our platform. You see, so here guys, let me just try to apply my template here because I don't use this. So remember that we always use white charts, clean white charts, no indicators. So guys, if you check this chart that I've currently opened, this is a chart of VIX 50 first index for our chart. So okay, fine. Since it's a few minutes trading strategy, we don't use a higher time frame. One. So H4 is not applicable to the strategy. Then we'll switch now. Let's do this. Now we're switching to what? To a lower time frame. So the maximum time frame that you can use here, it's H1, hourly chart. That's the maximum strategy a time frame you can use on this strategy. Few minutes trading strategy is just a combination of my strategies. So there guys, it's simple. It's not like maybe you have to maybe to draw many things. No, you just analyze application of order flow, institutional order flow. So order flow guys is just how the market orders enters the market, how people place trades in the market, how the big banks trades in the market, how they move the market prices. This is what we call order flow. Order flow can even explain itself. So okay, our order flow here is something like this. Let me show you. If you check, guys, the market here is trending down. We all see this. Né? But it's illiquid. It doesn't have many participants. It doesn't have many sellers. Because if it was liquid, okay, now if you can check, the market is moving like this, it's illiquid. If it was liquid, the market should move like this. I think you understand. So, but if you can check here, the market is just moving something like this. It's very slow, very slow. So this shows that the market anytime can break out up this bearish trend or this bearish move. Anytime it will rally up or it will run up or it will bullish up in a fast way. So the thing is that we don't know which level, but we can be able to calculate that level by analyzing or applying those strategies that I want to show you. But you know them, but it's just a combination. So firstly, apply order flow, check where the market is currently running, how is it moving. Even the momentum is very important because if the market was liquid, it should be moving like this. You see? And then if you can check, it's just something like this. So which shows that okay, many people like there is no many sellers in the market, so we can be looking to sell because the moment the market buys, it will just run up, like it will just create some, even create a bullish liquidity void in the first way, so it might get you off guard. So guys, if you check here, this is a hourly chart. If you check here, we're having something like this which we are looking for. So using this strategy, guys, it's like the advantages, you can end up winning a long-term trade. You can get up a swing trade by scalping, and at the end of the time, the market is favoring you more than the way you expected or predicted. So okay, this second, this is what we are looking for. So this is our current, this was our prediction by the time the market was trending down. So check this out. Again, now we are at hourly chart. So what to decrease the level of losing or also being able to get entries on a lower time frame. Go to 15 minutes. So okay, check here. Okay, let's apply 30 minutes so that I can try to include a lot of levels. So check this out, guys. This thing is not that hard, it's just that people they do fear. Okay, I think you are able to see the screen. I want you to check this out. Let me change this. I think it must be a bit light. No, yes. So guys, if you can check here from this highlighted screen, yeah, if you can be able to check, let me put this in here. Let's check this one together. So if you can check, guys, on this highlighted zone, the market prices were moving down, were going down, like putting for a long term. Started from there. Do you understand? The market prices were moving where? Down. Check. The market prices were trending down in this way. They were going down. Simple and straightforward. Clear, né? So that's the first step that you have to be able to know. So check. How do we see if this structure will get broken? Check this out. Order flow. For those who read my PDFs, I've sent them multiple setups or PDFs explaining this. I say the market will go down, but there is a level where the market will start consolidating. Then from there, it's giving you a what? An opportunity to join a upcoming bullish trend. So if you still remember, guys, for those who study my PDFs, the market will go down, then consolidate, and then go up. So it's a downtrend to to sideways market or to a ranging market structure. That from there it starts going up. Please let me repeat this. The market will go down, then will start going sideways, and then from there uptrend. You understand? So something like this. Then it goes down, then sideways, then uptrend. So this is an order flow. This is what we mean by order flow. Something like this. So this thing, you check the time frame that you are currently on. So another thing that you must know, when it goes down, yeah, it doesn't mean that every time it might just consolidate. Sometimes it might just do something like this. Create a swing point which is above from that level and start doing this. So the important thing that I want to show you on order flow, this is a downtrend. I need okay, let's just yeah. So this is a downtrend. Let's all agree. And then the thing that I want to show you is this. You see this level, the swing point that it's I need this one, it's our lower low, you know guys, and then lower low, something like that, the lower high, left, and then lower low, and then lower high, something like this. So if the market was really up, going down here, it will have came and clear and created this level where a lower low, and then created this level as a lower high. So the moment we see a swing point, the moment we see a level like this, which is above this level, that's where we are expecting a change of structure. Understood? So what I'm showing you, something like this. If you don't see this one, guys, just leave. I mean, it's a downtrend there, and then it comes up, then it creates another level, then it starts going where up, start creating a series of higher highs and lower highs, lower highs, and then HH, near one HH, something like that. So if you can check the signal that we got from our order flow, we didn't even draw anything in this one. So if you can check, this is what I'm talking about, and then this one is the signal that it's giving you. And from there, then what? This let's go. Do you understand the signal? So the important thing here, the thing that we want to make sure that we don't miss, is what is this level. This level is a confirmation. So the moment it comes and clears this level, then this is our what? This is our BOS. Then we wait for the market to go back below this level. Then we start buying. We know Gucci, the market won't be able to come back from this. It's a lower high. This is a lower low. And this is a lower low, then lower high, and then what? Lower high again. We understand that. So the moment the market now is starting to do what? To break this trend. You see, simple like that. So this is how we trade. So let's switch to 15 minutes so that you can be able to see this thing in a clear picture. Now let's start making the chart big. Okay, check. Yes, the level that I'm talking about. Let me do it in a dark way. Let me put it in the dark way. So you see, this is a level where we get the break of or a feel of continuation of that strat. And if you can be able to check this, guys, if you're able to check this out. You see, which this level, the one that I've drew the zone, it's not below that level. So if the market was still going down, it should have created that lower low below. You see, it should have created, let me do this. It should have created this level below here and then continue going down. You understand? So unfortunately, it wasn't like that. So which shows good here, the moment it fails to break below this level, it's a lower low and it created a lower what? A lower high. And then it means with the market is now starting to go bullish. So what do we do, guys? We do something like this. We wait for confirmation. This is a confirmation. And then we do this, these things, guys. Let me show you for those who don't know. I've made many videos on YouTube to show you that how do we identify our church and what's so called. So this is SMC, guys. So this is something that I use. I will show you something I don't use. So as usual, I'm willing to show you step by step. It's just that like when we share a signal, you might seem like we just guess or maybe we just look at the market. No, we analyze. It's just that we wait for confirmation sometimes. Then from that confirmation, it's all we share a signal. But then this is a what? This is a BOS. The one, the level that I'm drawing. This is our BOS. So let's do this. So now check what's going to happen. Check what's going to happen. Then from this zone, from this level, here, we are just getting confirmation. We don't place any trade. Confirmation, confirmation, confirmation. Now, the confirmation that we are getting from this zone is that the market will start bullishing up. So now what do? We know that the market is in a bullish structure. It will come and create another what? Another second lower lower high around that level, but we do not know which level exactly is it. So we know that the market will come and create this what? This lower high. But we know that the market won't come and break what? Below this previous lower high. This is a nice confirmation of a what? Of a bullish market strat. Then now, from that level, I want to show you something. We call this a point of interest. So the moment the market is going down, we know that it has to come and create a swing level or a point of interest where near this previous lower high. So how do we know or how do we expect that level? We do this. You see, what do we do? We do something like this. You see this previous red candle. Then now I'm introducing you order block. You see this previous red candle before the start of this bullish liquidity void. This is what we call it an order block. This it helps us to expect that reversal. It helps us to expect that reversal or that point of interest. Now, then if you can check here, this is what happened. This is our bullish order block, step by step. I know it's that. Yes, if you check now, I'm still say on the same time frame, 15 minutes time frame. Then if you can check now, let's remove these time frames here. Then if you can check now, what happened is this. Check from that level, check what happened. The price managed to come back and retested on that a zone that I've drawn my order block. You see? So what happened here is that the moment the market comes near or close this order block that I've drawn, this or let me do this so that people can be able to see. So the moment the market comes inside this is a bullish order block. You are willing to buy, no sell. So the moment we know, okay, this was a BOS that cleared, and then the market will, after clearing this, people they keep on buying, we don't buy, we relax. Then the market will have to trade back below this previous BOS. Then to trade that back, the previous BOS, then what happened is a bullish order block. So the moment the market is arriving here, it's near, we start buying, we buy. You can buy many as you can. This is how the strategy works. Because we are 100% sure the market will move from there to here, to this BOS. So that's 100% sure. So this is where the strategy clicks in. So the moment if you can check, you buy, the market is here, you buy. Then what happens? If you check, will it waste time from to move where you enter to here? No, because it's a what? It's a because it gives you an entry at a impulsive move. So if you can check how the bullish candle started here, then it was a nice bullish move, fast profit. At the end of the day, TP there. So this is how we do it. We enter here. It's our entry. It's our entry. And then from there, what happens? We hold from there to there, that previous BOS. So this is our target. And then at the end of the time, what happened? All profits or all trades were won. Then the moment the market arrives here, then you lock profits, you lock some trade, half, 50%, half, you lock half target, you lock 3 or 2. Then you leave them run. At the end of the time, check at the end of the day where you are now. You were far. So you see, this is a nice strategy because you first study the price by using order flow. When I say study price, you read the price, order flow, apply, check. Okay, this is a bullish, it's a bearish move. Then what will happen next? So the thing, keep in mind, we trade what's going to happen next. We don't trade what's happening currently. You see? So this is how we do it, guys. And then if you can check, that was done to be like more than the way it repeated itself. So here on this strategy, few minute strategy, we only use the BOS and what order block. Simple like that. Then order flow is it was our introduction. You understand? So order flow was our introduction. So if you want to hold for a long term, then you must know which okay, the market in the long term, it will move from there to there. It will move from here to here. To balance this bullish move, it will just do something like this. In a long term, it went down and it so it has to go where? To go up until where? To cover that move. So it can even come and break above. So if you are well patient enough, you can do this. And then you also know that, okay, my target is this previous bullish bearish move. Something like this. Let me show you. So we went bearish, then we are now coming bullish. You see? So same target, same TP, same stop loss. the target, just the vice versa. So you see, which using a PC, it's kind of interesting because you are even able to get or to see a bigger picture there. I want to shift this chart. Yeah. So if you can be able to check that, you can be able to do this. You know, good, okay, you held from there. This was a cell. Then what's your target? Then my target is the very same equal length from here to there, something like this. And then if you check now, what happened? You are half target. You are half away. Then you hold you keep placing more trees after every at the end of every working at the end of every retracement move. So simple like that. So now let's go and check another scenario. Okay, this is week 75. This is a 15 minutes chart. Let's go to a higher time frame. Let's go to H1 and see something. Remember the strategy from H1. So I want to show you something, guys, when it comes to the strategy on this condition. You see, there is somewhere, or okay, let me go to H4. I just want to. So guys, if you can check, there is somewhere or sometimes you might find something like this. Yeah, you see here the market was trending down, like so for some time. This week 75 ish. So if you can check, sorry for my mistake, I ended that share. So if you can check them, the VIX 75 was just trending down for some time. Like, yeah, check for some time. And then by the look of our order flow, and let's go to hourly chart. I need to just wanted to see how long it was trending on the 4 hours chart. So if you are able to find this on VIX 75, there is somewhere sometimes the market keeps going down, and then there is somewhere the market just like from out of the blue just start trending up. So this is what I want to talk about. Then if you can check, guys, here this VIX 75. Now you can be able to catch this move. Check if you still remember, for those who attend my sessions, then check what happened. We got this buy here. I applied this strategy showing them which how can we scalp VIX 75. At the end of the time, I even told them this strategy, guys, you can end up winning. Even now, I just said you can end up winning many swing trades at the end of the time, because what you do, you just apply and then you wait, you see, then from there you can even win. Check how's VIX 75 going. Like this was just the last trade that I placed on that session. I was just showing them, okay, how do you apply this strategy? But then check now, far. So where did I quote it? I quote it here. Why did I got it there? I want to explain that. Check just there on that, on this such a level. Just there. Even if this was not even a level, but there's something where we caught it. So okay, fine. Here, guys, this order flow. Let's just go to a lower time frame so you can be able to see. Let's go to 15 minutes, but it's gonna, yes, here it is. Here it is. So okay, guys, we know the market, even if it's going down, sometimes it has to go up. It won't always be going down, isn't so? Yes, it's like that, you know. So even if it's a downtrend, you know, okay, the market can, you see, even if it's going down, it even like sometimes goes up, something like that. So if you can check in short, here we had many sellers. Here we like the market was going down. We had many sellers, but what happened? It was unfair to what to buyers, because they were not having enough chance to buy or to participate in the market. So what happened is this: if we study the momentum of the candles, the biggest candles by the time it was trending down, it were bearish candles. Then it were the red candles, bearish candles or red candles. The moment you see big red candle, it shows that the momentum of sellers is very strong. But then if you can be able to check from here, let's scroll a bit back. If you are able to see, like what I'm talking about, something like this shows that, like something like this, like it's just that this is it's a PC. If it was a phone, we were going to be seeing the length of those candles. But then if you can check here, it was our lowest low of the month, of the of the month. So far so good. So what happened, it was just me now, I was scuppling from here. My plan was to scalp from here to where, to this previous level. So unfortunately, through the way, the moment I was holding this trade, I saw good to know, man, you know what? The buyers are now starting to gain control because of what the candles, they are starting to get stronger. You see, if you check now, the bullish candles are starting to get strong. And once the bullish candles start to get stronger, it shows that many people are starting to realize that by then this order flow, the market will end up going where, up, because many people are starting to realize the buy momentum and they are joining the bullish trend. Then this will influence the market to go up. That's how we do it, or that's what we talk about order flow. So if you check, we had such a level here, and then this level was what? Remember what I was talking about on the previous session. Let me just clear all and change the color. Then there was this level here. Do you see this level? And then check. If the market was serious about going down, it should have came and clear this low. It should have came and do something like this and go down. Unfortunately, it's obeying this zone. If you can check there, that level, guys, that zone, it's having a multiple retest on it, which those retests are talking to us. They are rejecting what? They are rejecting sellers, such things. So let me do this. So if you can check, guys, there, we had that level. How many retests did we have? 3 retests. So the moment we see many retests in this way, it shows, or it's communicating to us that, no man, you know what? Sellers are starting to lose control because these buying trades that are entering the market are many. And then from there, that gives us a what? A nice confirmation to show that the market is buying. So the moment it trends away from that level, you can wait for a second end. So unfortunately, we didn't have a retest on this level. I thought we were going to have a retest, but the market still again, it created another form of something like this. You see, something like that. So the moment the market creates something like this, it shows you that the market is really now changing its trend. It's supporting buy trades. It's giving you a lot of what? A lot of confirmations or enough time to join the bullish trend. Then from there, you're no longer going to get it. And then if you check, this is our what? BOS. So if you are patient enough, you know what happens. Then if you buy in here, you can place in 50,000 trades or any trades that you can be able to place. As long you know you're placing your trades on the key level. Then here it was our confirmation. And then that confirmation or that level, we use it as our what? Our stop loss. Then we stop loss here, stop loss below there, and then entry level where? Entry level here, here inside the green zone TP there. Then TP there. Then this TP, it will make sure to hit that TP because we're saving our TP to where? To the previous swing high, which is our BOS. So the moment the moment the market moves from here, it will come there. It's a must, the TP hit. Then, as I said, you can lock 50% profits after TP hit, and then you wait. Then at the end of the time, check, it just kept on going up so quick. So my strategy, It was just to start from there, willing to lose here, but to gain here. This is the 100% sure move that we are willing to pay. So the moment the market do something like this, those multiple retests, we call them these green levels. Those were our sell side liquidities, SSL, sell side liquidities. So here we just apply the order flow. We study every time applying order flow. That's the first thing that you have to do so that you can be able to know either you're looking to buy or to sell. And if you can check here, our order flow, we're going with its momentum. I've explained that the market was going down, but then what I realized, the biggest candles, they were changing to green. This is what we talk about momentum. Order flow, the market was going down, but we are looking to do what? To buy. The market, if it's going down, we're looking to buy. If the market goes up, we look to sell. That's it. At the moment the market is bullishing up, we're looking for reversal. That's what we trade. We don't trade. If the market going up, we don't buy. If the market going down, we don't sell. Unless it's a liquid market and also having enough confirmation or structure. So now let me show you how to join the trend. If the market is going down, you are willing to sell, but in a scalping way. Check this out. Let's go to, let me see. I want to show you using spikes because I will confuse. So here, guys, the only best strategy to use when you want to join a trend, only best strategy to use when you want to join a trend. Remember, my strategy, it's 1 hour. I will just identify those levels, 1 hour. We're done. No more switching below, no more switching up. Then let me clear everything. I want to show the best way to start using my strategy part on a 1 hour to hold for more than time. Let me show you something like this. What we call flip zone. Flip zone, it's something like this. A flip zone, guys, it's an opposite retest. I won't use this in a SMC way. I see breaker block or what. No, I just want to show that you understand. I will explain to you until you understand. If here the market was supporting, here it will come an opposite way. This is a flip zone. If the market was doing this, if the market was maybe, let's say it was okay, it retested up. The moment it breaks, when it comes back to retest oppositely, something like that. Do you understand? This is a flip zone. This green zone, it's our what? Our flip zone. That's where the market reaches on the previous swing high or swing low. Mark that level. Swing high or swing low. Simple. So here, if we can be able to identify our level of flip zone, it was this one. Here is our flip zone. So here it was retesting as what? As a bearish way. Here it was now supporting buys. Do you understand? This is the flip zone. So stop loss below, then guys, this is a flip zone. I will show you everything. So here, what it was showing us, it was giving us an entry in case we missed this breakout on the sell. You see this, that sell. This was a sell. This was a bullish run. This was a bullish run, bearish run. I mean, this it was a sell. So the market decided to do what? To break above that level. Then here it's our breakout. Then here it was supporting the sell. And here it's our breakout. Then breakout, what? Opposite retest. At the end of the day, it's a wick. You understand? So how do you see, or how do you confirm that this structure will break out? I told you we apply order flow. If this is a here's that level. Here we had a level of rejection block. Then I'll explain this later on. Then this it's an hourly chart. Né? If you want to understand, you can be able to switch to a lower time frame as 15 minutes. Let's go 15 minutes. Then 15 minutes, you can be able to come and see that level. So I've shown you guys this thing. I've shown you that the market on my PDFs, guys, I want to show you something that I don't use. I said, okay, the market will go down, and then the moment it starts moving in the sideways, it might, before it breaks, it moves up. It will break below and create a liquidity injection and come play again. But the moment it starts playing back again there. Okay, let me do this. The market will go down, will move down, will move down, will move down. Then there is a moment where it will start ranging. Then from the ranging, it will break below and inject liquidity. Then once it comes back to show that the market is here to buy or to start a big buy, you will start creating a swing levels which are starting to move above from each other. Then here is it what I'm talking about. This is the downtrend, and then this is our ranging market structure. This is the sideways market structure, and then this is the uptrend. Né? So the moment the market is consolidating here, it's accumulating liquidity or it's generating liquidity. So it will break below that ranging market structure and inject the liquidity by hitting or giving you a false signal. Then once it comes back, these swing levels will start to move away from each other. Then if we check, this was a long downtrend, it's a downtrend, and then this is the ranging market structure. Isn't this the ranging market structure? Simple. And then if you can check this level, this level is this level, isn't it? Then this level isn't this level, and then this level isn't this level. What's so hard? Then this ranging market here, isn't this the ranging market? Isn't this one? And then the downtrend, isn't this the downtrend? Here is the downtrend. And then what happened? Bullish, this is the uptrend. And then you see, this is how we get it on a lower time frame. If you are able to identify the downtrend, then you can be able to identify this thing on a lower time frame, 15 minutes or 5 minutes. And from there, you know what to do. Then here, Mina, let's go back to 1 hour chart. Then there, guys, Mina was just showing you a what? A flip zone. So let's identify more flip zones. So the flip zone is more accurate when you get it on these such conditions. When the market breaks out, then don't chase it, just wait for a retest. It will come there. I just want to show you in a professional manner, or let's just switch this asset. Maybe let's try with 25. My template, and it's the hourly chart. So that we can be able to identify a lot of ones. Let's just switch to a lower time frame, mid mark 18 minutes or 15. So okay, I just want to show you a perfect one. So guys, it might take time to find them, but it's not that. It's just that you can find many of them, but I wanted to show you accurate ones. I just wanted to show you accurate ones, accurate ones, accurate ones. So it seems like here this asset is moving slowly. Let's just check it's 100. It's 100. This is a 1 minute chart. Let's switch to 1 hour. Yeah. Let's use them on VIX 100. Simple like that. This VIX 100, let's switch to 15 minutes time frame so we can be able to identify a lot of them. You see here, another one, it's here. You can have many of them. This is VIX 100, the one that we are scared of. If you can check, you can either use that one or use that one. At the end of the time, you got it. So here it was not that accurate, but we obviously, if you were someone, the only one that was obeyed, it was not this one, it was this one. It was this one. If you are able to see nicely there, it was this one. So that one was invalid. So the one that got it was this one. You see, it was that one. But this was not accurate one. This is not the one that I'm looking for. The one that I'm looking for is something like this. Let me show you. Flip zoom. But you can hear its name as flip zoom. Yeah, so mostly the one that I wanted to show you is just that like this one was not that accurate. Something like this. This one was not that accurate. Something like this. Yeah. This is the one that I wanted to show you. But you know, guys, Forex, everything can't be accurate 100%. Sometimes you just have to do, because if the moment they do it accurately, everyone can be able to get it. So sometimes that's why even entries, when someone will be asking you, man, how do you get an accurate thing? There is no right time. There is no, like, there is no right time where I can say, yeah, here is the right time to buy. No, just sometimes if you're waiting for the right time, you lose a trade. So this one is the one that I wanted to show you. So the moment the market breaks down, don't chase it, don't sell, and just leave it. You leave it, it will come back and give you a second in if it's a true sell. So the moment the market breaks here, don't sell here. Don't sell. Don't sell. Just wait for the market to come back from that breakout and retest, and then you sell because it's safe. So let's say maybe now you are selling here. You are selling here. You sold. Then you are holding a trade. The market comes up. Maybe you sold somewhere there. Then the market comes out. Up. The market comes up. Then at the end of the time, it fits you. Then you sell more than 3 days. So that's something that is usual to happen. So don't change the market. Don't sell. So you only sell on a flip. So, and then another one is here. I don't know. So everything, guys, you won't get it accurately. Like there's no accurate things mostly in the market. But the moment it's accurate, everyone see it, and then people will end up no longer losing. Do you understand? So here's it. There about so every time when using a flip zone, the secret is this. Let me show you exit levels. So exit levels. You see, here's the breakout. Then the moment where the market ended that break, started to reverse, it's your TP. This your TP level. At the end of the day, you had a TP hit. And then even on this second one, where the market started to reverse up, this is your TP level. And at the end of the time, your TP is hit and you relax. That's how we use flip zones. Maybe let's try to identify other ones. So sometimes something like this can happen. Sometimes the ones that I wanted to show you, accurate flip zones. When we talk about accurate flip zone, something like this. This is a accurate flip zone. So here's an accurate flip zone. Then where do you set TP? TP here. Just check this out. TP there. Yeah, what? Stop loss above, few pips above the flip zone. So now what here, guys? Here, our swing level, then it broke out below. And the moment it broke below, you don't chase, just leave it. It will run like that. It can run the whole day down, the relax. It will give you an accurate what? An accurate retest. So the moment, guys, why are we having or we using flip zones as our entry? The reason we're using flip zone, the moment the market broke here, check, only sellers were in. This is a bearish liquidity void. Only sellers were taking a control. Then, so it was unfair to what? To the ones who are buying, to the buyers. So we didn't have buyers in the market. So the reason the market has to come back is to imbalance this move. This is a move or it's a gap. It's a gap. So the market has to balance the gap where it only had sellers, because you can't have people who are selling. And then if they are selling, who are buying? It has to be a balanced equation. Then you can't sell something to people who are not buying. Obvious, there is no market, there is no trade. The trade, they buy from us, we sell to them. That's what we do, trade. At ShopRite, they sell to us, we buy. But if there is no sellers, why should they still keep selling? Nothing. So the thing is, they sell here. It's only we had sellers only here. We had sellers. We had sellers only. At the end of the time, what happens? The market has to come back. You see now the bullish candles are starting to gain momentum because it's giving a fair chance to buyers to participate. So once the market managed to flip or to fill this gap, and it is like this. This thing is like this. And here's the gap. Here's the gap. Yeah, what? So the market, it will move slowly but surely going up to fill that gap. Once the market fills the gap, what happens? It goes down. So quick crash after filling that. So that's why we end up using our flip zone as an advantage. Uncle. So flip zone, we use them to join the trend. Because of what? We know that the market has to fill up the previous gap. Day one. So the thing, it was like this. That's why I showed you. We call this imbalancement. My people know when I talk about my imbalancement. So the thing is, it's just a fake game, a very nice fake game, a very nice fake game. The market was going bullish, and then the very same momentum or equal length it went to recover or to cover that loss. That's the very same TP that you have to use. So the very same TP that you have to eat, be willing to eat. Same length. Then if you check, simple guys, never. So the moment the market was running to our flip zone, something like this was happening. Let's just use here. Let's just use that. So if you can be able to see these guys, this is a nice confirmation or getting yourself an answer of how or where do I exit. Use the very same length. Anything I want. This is the very same length. So the moment the market was going down, it was just unfair by the way it went down. It just crashed. So it has to imbalance. Then after imbalancing, this red move is that current gap that has to be filled. Then the blue move is the one that you have to eat. And then if you are trading, TP below here, and then stop loss above there, and then this is what I talk. Stop loss maybe few pips above there or there, because sometimes it might not retest exactly here. So if it's few pips there, and then you know what you are willing to eat big, and then at the end of the day, you ate big TP there. You entered where? You entered here. Then it's a nice profit. So you see, flip zone. So the reason we don't set stop loss exactly, you see, is like this. Don't set exactly, set somewhere few pips there. From what is it that influenced you? Is this by the time when the candle started to reject, you set it there. So at the end of the time, if you set it here exactly, it kicks you out something like this. So it went down. It goes down. So at the end of the time, you can be crying. So here is it. What influenced you to set your stop loss? The start of those candles where they started to reject. Simple like that. So I think I've managed to show you this strategy, guys. But then we're still going to do more of it. I will be explaining, because here the strategy is like making sure that you get a trade or an entry where it will give you profit same time or less than 5 minutes or 10 minutes or 1 hour, like fast profit. That's what I'm saying. It's a few minute strategy. Then we're holding from here to there, like fast. So good luck, guys. I really appreciate your presence in this video, for viewing this video. Peace, guys. This is part one. I'll keep doing more videos explaining you or showing you how to use this strategy. And then good luck, guys. Good luck. So before I go, let me show you, for those who attend my sessions, don't forget this is a demo account, guys. Don't kill me. And then we had such trades. The ones that I placed on the previous session, which was here. What's the date? Here's the date. Here's the date. There is a video that I've uploaded on YouTube. It was about this. Check this date. Since I placed those trades, all these trades that are running here, I've placed them on that day. Just to show you the strategy that I'm explaining. So you see, like all trades are cruising nicely, just maybe few trades whether you won't own all of them. But at the end of the day, you see all those trades. Check the date, guys. Same date. Same date. By the 2nd of it's September. It's October, yeah. October 2022, October 2nd day of October. Check all trades. You see, all trades. At the end of the day, they were giving us this balance profit. So just like I was just showing you. Okay, Futi, let me go to the chart. I was just showing you guys on how to scalp. So 75. So here it was 675, but I've shown you where I got it somewhere there. So you see, sometimes you just like have to build patience. So good luck, guys. Till we meet on the second session. Peace. I'm out.